All right, welcome to Mortgage Talk with Bill Murphy. Got an amazing guest on board today, Bill Murphy. He's a huge producer, awesome guy, and just has a super amount of knowledge in the way of mortgages and making sure that his buyers get to the closing table. So thanks for coming on with us today, Bill. Got some in-depth questions for you, and we'll have some time at the end for open discussion and or questions from any of the agents that are watching. This is recorded, so anybody that's not able to make it today will be able to watch this. Well, Bill, tell us a little bit about your experience and how long you've been in the industry, and just a little bit about yourself.
Sure. Thanks, Tracy. Thanks for having me on. I appreciate it. It's an honor to get in front of your agents. I know how much work you put into investing in your own agents over the years. So again, very honored to be on. So I've been in the mortgage business about 23 years. This is my 23rd year.
Oh, wow.
Been with Fairway for 14 years. Yeah. And started out in California with a subprime broker, and then moved back to Massachusetts and went to Fleet before they were bought out by Bank of America, and then a small brokerage shop, and then on to Fairway for the last 14 years. So Fairway's an incredible company. We're, believe it or not, we're a top 5 lender in the country,
Wow.
which it blows me away. It blows me away to be even part of that. I think when I started, I was like the number 400th employee, and now we have over 10,000 employees with the company. So very innovative. We're trying to, want to be the number 1 lender in the country. We want to chase Quicken, because we feel like we can do it with a higher level of service. For some of the online lenders that are out there, that's they get their lunch eaten by an agent if it's an online lender out of town that nobody's heard of, likes, or trusts. So it's still super important to have those relationships. So I've been originating. I still originate. Got a branch in Auburn, one in Sturbridge, one in Woburn, couple in Connecticut. Our branch is licensed in all New England states, down in Florida. So we do some out of state, but I love to just hang out in Central Mass and do 90% of my loans there. So that's because we know it. I mean, we know it better than anybody. And
Right.
One of the things that your agents, I want to teach your agents today is appraisals. Appraisals aren't coming in, and there are solutions to get around them, and especially
That's going to be one of my questions for sure.
Yeah, so we'll get into that, and there's a strategy. There's a strategy we can talk about. There's a strategy we can talk about to help your agents overcome that. So part of my experience is always being creative and coming up with a solution, because I always believe in every situation is a solution. You're with the banks, you're with the online lenders, and they're like, no, it's denied, that's it. Oh, rebuttal? I don't know what a rebuttal is, so I don't know how we can do that with an appraisal. So that's why you want to have experience. Experience is good when you have an issue. When everything goes smooth, and your former your lender was a pet sitter 6 months ago, then that's now they're selling loans and it goes smooth. It's a great experience. But when it comes time to think outside the box and huddle with the team, the agents and the attorneys, then you really need a true professional. So
Sure.
That's, I think, we're able to differentiate ourselves a little bit.
Okay, awesome. Let's get into it then. So a couple questions before we get into some of the more in-depth questions, but this is one of the biggest ones to me. Why is it important that agents suggest to their clients a local mortgage lender they can trust?
We were just kind of talking a little bit about that. Your online lender outside the state, sounds like some of them are outside the country at times. They don't know the area. They're not going to be able to fight with an appraiser. They're not going to be able to battle, with a title issue that somebody inside may know. That's you want a reputation. First of all, an agent on the other side, if you're representing your buyer, and you have this XYZ mortgage company that nobody's ever heard of, and you're presenting an offer, and you have a strong offer, by a reputable lender, you're gonna help your seller, go with the seller is gonna choose the better lender based on what the agent knows.
I
That's
totally agree.
definitely.
Probably one of the biggest factors right now is just trust. When you have 25 offers and 5 of them are exactly the same, it's going to come down to trust.
Absolutely.
Trust for sure.
Absolutely.
I guess it also brings up the question, why is it really important for a buyer in particular to get a lender involved early in the process?
You talking about the sellers? The buyers
in the selling process, I mean, in buying a home. Why should they really start talking to you right away? I mean, we encourage it as real estate agents, but why is it so important?
Oh yeah, I mean, first of all, a pre-approval is, you want to have a strong pre-approval, and you want to have a pre-approval that, we're actually having them underwritten, a lot of pre-approvals underwritten prior to them going out. A lot of the Middlesex and Suffolk and Norfolk agents are asking for that. But what we do anyways is we do the credit check. We collect all the income assets. We run it through desktop underwriting and get an approve eligible, and then that is to us. We don't deny loans. So I mean, that's almost as good as being pre-underwritten. However, we can take it to the next level and have a file pre-underwritten with a commitment TBD, to be determined address.
So if you have a buyer right now as an agent who's just having trouble competing and winning offers, you would probably suggest that, right?
Absolutely. Mm-hmm. We've gotten 2 offers accepted last week just because of that in competing offers.
So that to me is a big piece of advice to take from this today is if your buyer is losing bids, it's time to, if they haven't wanted to yet, it's time to encourage them to get fully underwritten. So you can identify that as a different level of a pre-approval when you're submitting an offer. Sure.
Yeah.
All right, let's move on to the next questions. All right, we got some more questions for you. What is the state of the lending market right now? Is it stable? Is it changing? Is it getting easier or harder to get a loan right now?
It's probably getting easier, believe it or not, to get a loan, and the reason for that is because all these banks, lenders, secondary markets have staffed up because of the refinances. So when that happens, when there's so much business coming in, they tighten. Now that rates gone up and the refis are starting to dissipate, they loosen guidelines. A lot of people don't understand that. So like there's, they start lowering FICO scores. They start getting a little bit, they get looser with guidelines as far as approving somebody that you're like, wow, they wouldn't approve that 6 months ago. So because they want to keep people employed, because they want to keep the volume coming in as much as they can, guidance, believe it or not, it's as counterintuitive as it seems, guidelines kind of expand a little bit and loosen up.
Oh, okay, good to know. Is it where do you see the rates going?
Higher.
Higher.
So interesting today, the market was calling for higher rates because of the hot inflation numbers. So the way inflation works and why we're going to see rates going up, and this is very important. Remember, last year at this time, the country, the world shut down for all intents and purposes.
Yeah.
There was no money coming into the economy, right? So these numbers that came up, the CPIs and the PPIs and these inflation indexes, basically were up against year over year last year. So the Federal Reserve says, hey, we want to let it run hot because it hasn't been, we want to get this economy rolling again. Well, now things that are loosening up and, you get the vaccines and all this other stuff, inflation starts going up because if you compare it to last year, you don't have much to compare it to. Yeah. So you're going to see inflation run hot all the way through the summer. Now, things started to loosen up in the fall last year. You'll probably see inflation start to come back and normalize. And when that happens, rates may come back down. But the prediction right now is through the summer, you'll probably see, we were as low as 2 3/4. You'll probably see rates rise to about 3 3/4. We're still around 3 1/4 today. Okay. So I do want to make a point. The inflation number came out this morning, which was very hot, and they knew it was going to be hot. the bond market instantly reacted negatively, which means it's selling off because, and it hurts our rates, right?
Okay.
So our rates just were about to shoot up. Then Johnson and Johnson said, well, wait a second. This vaccine, this one-shot vaccine, that's what it is, the one-shot vaccine.
Yeah.
We got, 7 people and they're all women. They got blood clots and one died. Oh crap. The market just went the other way right now. So now the bond market, money goes into a bond market when there's fear. And so the fear is, hey, what's next? Johnson & Johnson's at a halt. What if Moderna's at a halt? What if, AstraZeneca, what if all these pharmaceuticals realize, we're realizing that there's issues with these vaccines and their side effects. Now, oh no, what's going to happen to the economy? So fear drives the market. So the market instantly turned around 60 basis points within a half hour. It's before we got on this call, we were plus 27 basis points, which means that rates will tick down. But the start of the morning, they were ready to go up about 1/8 of a point. They're probably close to down to 1/8 of a point, if you can believe it. So it's so volatile right now. But in the long term, if the vaccinations and things keep normalizing at the rapid rate that they are, you're going to see rates go up over the summer as things loosen in the economy.
So someone that's looking to buy in the next few months, would you recommend they lock in now? All right.
Yeah, absolutely.
All right. Any other changes going on? I know they came out with new FHA rates for 2021 in Worcester County, which to me probably aren't really keeping pace with the market.
It's not. So it went up about, what is it, 30 grand or so from where it was last year, the FHA.
It's not really enough though for what's available in the market.
Oh yeah. It didn't rise as much as it should have.
What is that single family in Worcester County? It's like 356 or something?
360, was it 3? We were at 340, 364 maybe.
Yeah.
I have the chart. I can send the chart.
I mean, for any agent that's looking for that is readily available information. I always forget, so I always end up Googling FHA. Limits in Worcester County, and you can find it. But
so I forget because sometimes we're in Middlesex, sometimes Worcester, sometimes we're looking at Springfield. It's like, okay. And then it's
not a round number, so it's not an easy number to remember.
It was like 364 something, and it was 339 last year, 339, 750.
What do you see going on? Appraisal issues? You see more and more appraisal issues coming up?
Yeah, appraisal.
I mean, it's tough. I'm battling. I know a lot of agents are battling with, you're making great offers and you're questioning, and even on the selling side, if you're the listing agent, you're questioning, if they don't have appraisal gap coverage, is it going to appraise? And it's almost like you're waiting till the end of the month to watch those new comps come out. I mean, the good part about it is that a lot of buyers have enough cash that they are, guaranteeing the appraisal, basically saying, as long as it appraises at list price or better, I'll close and I'll come with additional down payment money. So I guess in one sense, every month new comps at a higher level are being created, but I still see more and more appraisal issues coming up because it's continuing to further progress every month. It seems like it's up another 5%. It's craziness.
Yeah. So here's the deal, Tracy. This is what we've been seeing and how we've been helping some people that have been getting shut out of, they're on a 10th house. And I've had some buyers say they drove up to an open house and there was a line going to the other block and they didn't even bother going in because they knew. So let's put this into perspective. Let's just say, you got a buyer ready to go. 350 is where they want to be. They realize they can't find that house at 350 and they want to go to 375. They're still having a tough time. They're putting 5% down. They go to the top of the market. You know what? I can barely squeeze out 400,000, but I can get pre-approved. This will work. 400,000, 5% down. That's all I can do. They're never going to get that house.
Yeah.
The reason, the house that is attracting everybody, right?
Yeah.
So what we started to do was, because that was so common, that people start out a little cushion and they realize that they want to take it to have to take it to the max to get that house that they want. The problem is, they don't have the money. So we started looking at, hey, I see that you're taking money from, your checking and savings, but you have $100,000 in your 401k. Why not at least say you can tap into that, and that 50 grand would be another 10% down or whatever. And now you're a stronger buyer without a contingency if it doesn't appraise. And then what happens if it doesn't appraise, it goes 50 grand over and you still can't cover it? Well, oh yeah, my mom and dad said they would, this is our first house. They said they would gift us as much as we needed. So then you could have a gift. So now what you want to do, instead of putting that 5% down, buyer, say, listen, let's structure it at 20% down. You go over asking, there's still room if it under appraises, 10, 15, 20% for you to play with. So you don't lose out. If you're just that 5% buyer, you're going to lose out every single time. So let's get creative, talk and show that you can. Now, however, you'd be like, well, I don't really want to get the gift now. I really don't want to liquidate my 401k. That's fine. So we'll approve you at 5% down, knowing that you can go 20% down if you had to.
Right.
If it doesn't appraise.
And then let the listing agent know, that the buyer will increase the down payment as necessary, up to 20% down to make sure this closes. That's a good tactic. And creativity is definitely
and the other thing
required right now.
Yeah, and it's worked. We've been seeing it. So it's actually helped a few of our buyers who just wanted to be 5% down. We started to explore a little bit. One did have a 401k. One said they could get a gift, and sure enough, when they got their offer accepted, it appraised like 30 grand under, and we were able to work with that because of the gift that they were getting. They still were putting some of their own funds into the transaction. And the other thing is, there's a formula to realize is, if it doesn't appraise and you're off by 50 grand, you don't have to make up 50 grand. You have to make up a percentage to qualify. If they were a 10% down buyer, maybe if they have to make up 15 or 20 grand, not 50 grand. So a lot of people think that they're out of the mix if that happens. So it's just more or less what they're putting down, what the price is, what it appraised at, and then you bring the purchase price in with the appraised value. This is for a whole nother day.
Yeah.
But what I'm saying is it doesn't equate to the amount it doesn't appraise at.
Okay. All right. Good to know. I did not know that. Nice. What's FHA? I know we talked about the limits, but are you seeing FHA issues still popping up on appraisals? I mean, I know a lot of agents are pretty savvy now as to what FHA is looking for, and so I'm hearing less of them. What's that?
They're so well versed. I mean, agents are so well versed in FHA, and the FHA pre-approved buyers aren't getting their offers accepted.
Yeah, it's more rare for sure.
Unless it's a fixer upper and it says cash or 203k loan. I mean, we're trying to take people out of FHA and put them into some type of conventional financing just because we know they're not going to get their offer accepted. So that's where mass housing comes in. Mass housing is a great alternative if we can get them squeezed into that.
Okay.
So yeah, mass housing, low down payment. They're a little bit, the credit scores are a little bit higher. Conventional financing remember what we said in the beginning has kind of loosened their requirements. So more of these conventional loans are getting approved that may not have gotten approved a few months ago.
Okay. Yeah, definitely seeing.
And then you have Home Ready and Home Possible, which is kind of your first time home buyer stuff, low to moderate income, which is another first time home buyer that we can pull out of FHA and possibly stick it into the conventional financing piece to help them get their offer accepted.
Okay. Which is yet another reason buyers need to be talking to you early, so you and the agent can figure out best possible approach. If they're just, if you're just talking to your buyer and like, okay, where's your pre-approval? And that's the first time you're looking at their pre-approval or talking to the buyer and the lender about it, it's too late in the game. You really have to be talking about it early on before you're ready to submit an offer so that you are prepared. How are we going to structure this? When we are ready to make an offer, so we'll give ourselves the best chance of getting a property.
Absolutely.
So.
Yeah.
Anyone doing renovation loans right now? I haven't seen or heard any streamlines or 203K or anything lately.
No, those are the ones that are really involved, because it says cash or renovation. If they get the cash offer, they're gonna go with that. It's,
Yeah, I'm
we're
surprised
mostly
I'm not
doing
seeing
those
a
on
little bit
refinance.
more of them though, because I do see some of the properties that are in rougher shape being the better opportunities right now. I guess
Yeah.
people are just more or less deciding they're gonna renovate it with their cash after the fact. Is that what more people are doing? I'm surprised I'm not seeing a few more renovation loans going on right now.
Well, because the seller has the pick of the buyer right now, and if if there's a pre-approved renovation, as opposed to a cash deal, or a 50% down that may not need the renovation, but they want to so they're eliminated pretty quickly.
Yeah, I mean, there's not that many bank-owned properties right now, so that's,
Well, that's the other thing, yeah.
there's not as many as-is type of sales going on right now.
Mhm.
Sure. But they are still available out there if someone
Oh yeah,
finds a
Yeah, we're
property,
doing
that's got a failed septic or,
field septic is big.
Yeah.
Where we're doing a lot of renovations is the second homes. The field septic, like you just mentioned, I got a guy down the Cape, went back on the market. It was a field septic. We're doing a home style loan because it's a second home. That's a conventional. It's not FHA, but it's conventional because it's a second home. You can also do a renovation loan, and a lot of people don't know this, is on a 1-unit investment. As long as you put down 15% conventional financing, it's a home style.
oh, wow.
But the opportunity, hasn't been there really much lately.
For sure, for sure. Any options out there for new construction? I know limited inventory. We definitely get more inquiries about possibly building. It just doesn't seem like there's a lot of loan resources out there right now for that.
Yeah, we don't do the construction loans. We'll do, if the builder owns the lot or if it's a development, we'll do those all day long. But we won't finance the lot and the build right now.
Mostly credit unions, I guess. Probably.
Yeah, I've dealt with I got a good buddy over at Unibank that I deal with for that, and that's like he'll send me his VA and FHA stuff, and I'll send him construction. Dave Sampson over at Unibank. They do. I use them to build my house in Grafton a few years ago, and sent quite a few people over there. So he does a nice job with the construction loans.
Okay. Yeah, I mean, I'm not seeing that much of it. A, because there's not a lot of land in the market, and B, the process of finding a builder that's got availability to build you a house in the next 12 months is pretty slim too.
Yeah.
And the prices for piece of plywood are
it's too expensive.
$100 for a 4x8 sheet of plywood.
It's too expensive.
It's craziness for sure. But all right, let's see what else. What other strange things have you seen that might be good things for agents to know? Anything strange you're seeing lately?
Well, yeah. Remember, if you have that buyer that gives you a 5% down pre-approval letter, explore that. Have them explore going more with that, because when they get shut out of the first 8 houses, they may be so discouraged. You may have wasted your time. See what they can do there. This is gonna go on. So get them pre-approved for more with more of a down payment. And we talked about some strategies there. That's definitely.
Appraisals asking crazy questions like, we had an appraisal come in short and the appraisal basically said, you accepted an offer, the second day it was on the market, you didn't have it on the market long enough to prove that it's worth $10,000, $20,000 more than the list price.
Who said that? An appraiser?
Appraiser said that and appraised it less than list price. What happens in a situation like that? Like if you think that appraisal is totally bogus, can you throw it out? Can you rebut it?
Yeah, so a rebuttal is it's kind of an act of God to get that appraisal flawed. But if I guess you would need that kind of commentary in writing, and it's highly unlikely you'll get it unless you're taping it, right? Get it on video camera or whatever.
Walk down with a video.
And these days, who the hell knows if it is being taped? But anyway, if an appraiser's that dumb to say something like that, they just put their foot in their mouth, and I think they're asking for trouble. There's 2 sides to every story, so who really knows? But the appraisers are digging in. But so here's one of the things we've been doing is when we have to rebut those appraisals, I call the agent and I say, how many offers did you have over asking? And they'll say, well, we had 25 offers, 17 of them were over asking, and the top 3 were 50 grand over asking. I say, send me all those offers. Obviously get the permission, whatever you need to do, but send me all those offers. And then I'll send those in. And what we've been able to do is we've been able to send that for a field review. We send it to credit risk. It's a formal process where you have to rebut the appraisal. So you send it into the chief appraiser. The chief appraiser reviews it, sends it to the appraiser. The appraiser has 72 hours to answer your rebuttal. 9 out of 10 times they say, you know what? Nope, I'm keeping my value. I'm not changing it. So then you say, well, I wish to escalate that to credit risk. Credit risk will look at it. We'll supply some more data, and then they'll say, you know what? All right, fair enough. Let's get a field reviewer, which is another appraiser, to take that work, take all the information, the comps, the CMAs, the offers over asking, and say, hey, you know what? This appraiser, he should have been pretty close to that agreed upon price. Maybe a lot closer. And then so they give their opinion, and now you have an appraisal where you can get a second appraisal. So this is a process, though. If you have 30,
you have to do rebuttal, and then if they merit it, you still have to get another appraisal done.
You have to get another appraisal. I've only had one recently in Connecticut that underappraised 50 grand, and it was a one shot. This is the only time in my career at Fairway that they flawed it without a field review. The only time it's ever happened, and I kid you not, the appraisal, it was a multiple offer situation. The appraisal came in, so this is 50 grand lower. The appraisal came in 20 grand higher on the second one, a $70,000 difference. Wow. And the price was right around 500,000 in Connecticut. So again, get your CMA, make sure it's strong, get your days on the market, your offers, all your offers together. And here's the other thing, this is key. Now, a lot of times it's 30 days, 21 days before the appraisal has happened. And now you're going through the process, 30 days has passed. Hey, you know what? There was a house that just went under agreement across the street, and I know that went higher than the one we just had. Okay, well, what's it under agreement for? Well, I know it's more than what we have. So, okay, we'll wait for that to close.
Yeah.
Wait for it to close. You can't order another appraisal until it closes. Wait for it to close, and then you can use that as your comp. That has saved us time and time again.
I was just going to say that the market's moving so fast. Timing of appraisal is almost important too. Especially if you're like closing next month and your deal is under agreement mid-month, and you almost want the appraisal to be a few days after the first of the month, because those new comps could be changing your appraisal.
Yeah.
So managing that,
you have to wait.
Is definitely.
I mean, it's going to delay your closing, but at least you know you'll come in.
Yeah, I mean, if you're putting a deal under agreement now to close the end of May, you could probably still closing on time if the appraisal's done on May 2nd or May 3rd.
Yeah.
Right?
We're just talking about an appraisal that you're trying to. It comes in undervalued.
Oh, okay. So, but even on the proactive side, you get an offer accepted now and you're closing end of May. It may be a good idea to time that appraisal for, the 2nd or 3rd of May.
Yeah.
Just know that everything else should be moving in the right direction. Obviously talk to the lender about it, but if you're having that, when you're submitting offers and you're looking at comps and not seeing the comps and being worried about the appraisal, maybe it's something you proactively as an agent should be doing, is just managing that process closer and saying, all right, let's see if any new comps come out in the next week or two, that knowing that those are probably going to be better than they were the month before.
Yeah, an appraiser does use on their in their appraisal, they do use a under agreements.
Okay.
But they can't use those as comparable sales.
Right.
So that's why you want those to close.
Right. For sure. Closing costs. It seems like half the time buyers have no idea what they're going to be. Any advice for agents just on closing costs? I know there's such a huge range. It can be I've heard anywhere from 2% to 3%, depends on the loan. I know if it's VA, there's an additional 2% funding fee?
Well, that gets rolled in. So with FHA and VA, they both get rolled in. It's finance. So that'll freak if the loan officer doesn't do a good job explaining that to the veteran or to the FHA buyer, that will freak them out.
Oh, yeah.
Because yeah. So if you have a $400,000 loan for a veteran and they have a 2% funding fee, like you said, that's $8,000 that just jumps out at you, in addition to the $7 or $8,000 that was in prepaid taxes, insurance, attorney fees, and lender fees. And now you're talking $16,000. You're like, what is that? You can't believe it's ripping me off. And it's on there, and it's misleading. Same with FHA.
Yeah.
I had a kid refinancing second time around, and he was giving my staff a hard time. Now, keep in mind, he was in an FHA loan, permanent PMI. We're saving him $370 a month, right? And he really needed it. He was laid off last week, and he kept emailing my staff. He's like, what is going on with these closing costs? It's not what we talked about. And like, I'm not moving forward, and I don't want to pay for this appraisal. I called him up this morning. I said, Josh, do you understand that your closing costs show $6,000? 2,800 of them were lender fees. The other closing cost piece of that was your prepaid items. You have your year of insurance and 6 months of taxes, and you're getting back what you had in escrow. Oh, so you mean nothing out of pocket? And so it's just,
Right.
Sometimes you have to have that conversation twice.
Yeah,
And,
for sure.
because, I had that conversation, but these are the things that happen. And they start asking their agent, or they start asking. It's very important for the loan officer to have that. Like, I have my team or myself, as soon as we disclose a loan estimate, we have to call them. And a lot of times we'll be leaving a message and say, hey, listen, we sent you all the disclosures. You're going to have questions. Give us a call so we can go over everything with you so you understand. And that just goes a long way. And it'll take the back and forth with the agent out. It'll take a lot of stress off up front if we make sure we have those calls and have the conversation.
I mean, I know buyers ask us all the time, you really need a property identified to estimate the closing costs, correct?
Yeah, if you know the taxes, and we can kind of back into it.
I mean, I find that some lender, when you are pre-approving a buyer, do you tend to give them a range so they have an idea how much money they're going to need?
Oh yeah.
Yeah.
Oh, yeah.
I find some lenders aren't even giving them that, and they have no idea, and then they're asking us. It's really not a question I want my agents answering, because they can vary. They can vary on a lot of things. And
Well, then they're not pre-approved correctly, because think about it. If it's again, if we go back to that 5% buyer, and then you have $6,000, $7,000, $8,000 in closing costs, you better be having that conversation, or you better be verifying that they have those funds, because you'd be putting everybody in an awkward situation. And guess what? They're not really pre-approved. And the days of asking for seller concessions right now,
they're over. Yeah.
right now, I mean, that used to be the norm 2 years ago. That was on every other first-time home buyer was a seller concession.
Absolutely.
I have first-time home buyers saying, well, my dad said, make sure the seller pays my closing costs. I said, your dad's out of the loop. He doesn't know what's going on here.
Yeah.
Have your dad call me, because those days are gone.
Yeah, for sure. Couple other things. I know the market's crazy. How many pre-approvals is a lender sitting on per actual offer that gets accepted right now? It's got to be a ton, right? I mean,
Oh my God.
there's 15, 20 offers at minimum on every listing. My guess is there's got to be at least a few hundred buyers that are just not, that are probably pre-approved in that, probably more than that, sitting in that range, that are just like, I don't want to play part of that game right now.
Yeah, man.
I mean, you guys must be sitting on a ton of pre-approval letters
I've
that
been on a ton of pre-approvals,
aren't going anywhere.
a ton of
Crazy.
pre-approvals.
And unfortunately, I don't see anything changing our inventory levels in central Massachusetts, or pretty much anywhere in Massachusetts.
I mean, you're a stat guy, Tracy, and I'm going to ask you this question. I get MLS listings and stuff sent to me because I just want to kind of keep a pulse on the market and everything. It seems like the last two weeks or so, there's been, I've seen more activity, and then I talk to a lot of agents, and they say they have a lot of coming soons and listings that they're in the works with. Are you seeing that? Are you?
Yeah, we're seeing and hearing that. It is what I would say is a normal spring happening. More listings do come on the market. I don't see it being anywhere near enough. I think every listing that comes on throughout the summer at least, we'll have 10, 15, 20 offers on it. Now, don't get me wrong. If you're in certain towns and you're over 600,000 or 700,000, it's not going to be the same. But if pretty much I can generalize and say, if you're listing a property or looking to buy a property under 400,000, there's going to be 15, probably a minimum of 15 offers on every property. And with new and more listings coming on, it's also the time of year that more buyers come into the market. I've got agents that's basically saying, I'm not taking any more buyers right now. I can't get my current buyers into a house. So why am I going to take on more buyers? It's the problem's not going away. The inventory problem will not go away this year. And I don't know if it will at any point in time unless people just decide, you know, I almost want to put a campaign out there that says, if you've ever thought about moving away from New England, now is the time. Sell your house, go to Texas, buy a $400,000 mansion, and just do it. Because I don't see a big foreclosure crisis coming. I don't see anything that, it's not like all of a sudden developers are going to get the green light to build 100 homes a year. There's not a mass exodus of people out of Massachusetts that are in the workforce. It's maybe people that do have the flexibility to move. Maybe, you know, people that are, you know, have owned their house 20, 30 years and now's the time to move out of the state. I don't know. I mean, I just think that none of that is going to answer our inventory problems. So the market's going to continue to kind of be pressed upwards unless something keeps it from, something kind of knocks it back a little bit. A big enough interest rate increase could probably do that. But other than that, I don't know. I don't think there's a solution to the inventory problem.
Well, so remember in 2000, after the market crashed, 2008, 2009, they rolled out, the government rolled out the first-time home buyer incentive for $7 or $8 grand, and that made the difference.
I mean, Biden,
so
doing that.
Biden. So here's the thing. The Biden administration, and this is asinine, so no one's ever worked in real estate or mortgages, whoever came up with this is saying, let's do another first-time home buyer incentive. You don't need a first-time home buyer incentive. You need a seller incentive. Like, why not flip the script? You know, hey, here's your $15,000 seller incentive. You want to see the market change? That's what we need to do.
Right.
It's probably very simple to do. And so Ivy Zellman was on with us when we did our economic class at the board on Zoom last month, and I don't know if she mentioned it in the class, but she mentioned it, that there was talk of them hopefully coming out with something by the end of the year.
Well, that's good. I mean, maybe
they were original.
Maybe even consider taking out the 3-year occupancy requirement to get no capital gains on sale. I mean, people that bought 2 years ago might consider doing that at this point. You know, they do need to do something.
And give the builders a break. Give the builders a break too. It's too expensive.
Yeah, that, and the big thing that I think that holds back the market is lack of understanding that as a seller, you can still name your terms. I wish more sellers would understand that you can put your house on the market and say to a buyer, I'm going to need 6 months to find another home, to try to find another home. I can guarantee you'd have multiple offers in that situation, because there's a lot of buyers who are just in a 30-day notice to move out of their apartment. And they have no problem waiting 2, 3, 4, 5, 6 months because they just want to stop looking for homes. So too many sellers are like, oh, I don't see anything that I would want to buy, and I'm not going to be pressured, so I'm not going to put my house on the market. My advice to sellers is talk with an agent and you set your terms. And if you want 6 months to find suitable housing, I'm sure there's a buyer that would make an offer on your house. You know what I'm hearing a lot, and less in Worcester County, but more I'm hearing it from Middlesex County, is longer term seller leasebacks. I hate that in the generality of it, because as soon as you lease back, you have a tenant on your hands, and that tenant is subject to mass tenant laws and landlord laws. But I hear it's happening a lot, especially if a seller wants to cash in, but they're not ready to move out of New England until the end of the year or in the fall, or who knows when. I see that's happening a lot. pretty crazy.
Yeah, I pre-approved a kid out of college. You know, his dad was encouraging him to get into real estate, and instead of staying at the dorms, to go, get a place off campus. So they were pre-approved together. Obviously, the kid didn't have a full-time job, so he wouldn't qualify. So it got to the point where he was missing out on some deals. A lot of it was, entry level, 200, 250, whatever, condos. And finally he put in a cash offer, and the cash offer, it was a little lady, but she wanted security. She just wanted to sell her condo, and escalation clause. So they agreed, and I don't even think it was the highest offer, but they agreed to do a rent back until September 1st, till college starts. And so that worked out. I think it was 240 and the highest was 245, but the other buyer wasn't going to rent back to the little lady. So, and then what we'll end up doing is we pre-approved them. So then in 6 months, we'll just refinance them.
Yeah,
no problem.
Yeah, it's craziness. Any other advice that you want to give any agents out there, or any buyers or sellers for that matter? Because I think this is even a useful recording for any buyer or seller to listen to too, to just understand what's going on out there. But any advice for anyone out there that's looking to buy, sell, or who is an agent that?
Yeah, if you're thinking about selling, think about it. If the rates go up, a full point from where they were, that's going to cost you, hundreds of thousands of dollars over the course of a 30-year, just by waiting a half year. What better time than now, when you have no competition in listings, and instead of waiting. We talked to would-be sellers who were going to pre-approve. Oh yeah, I'm gonna list in May or June, and be like, no, do it now. You need to do it now.
Yeah.
Do
it now.
Get the dumpster and get. Yeah.
Yeah, for sure.
So, that's definitely one thing we're talking about.
Yeah, I guess it's a market of creativity for sure. If you're on the buy side, you got to be creative, and I guess I'd encourage sellers to think creatively too. If you're looking to cash out on probably the best sellers market I've seen in my 15 years, plus probably 5 years before that, I see some sellers that have been very creative that are cashing in. Maybe it's renting a short-term rental for a year or two after cashing in and waiting for things to cool down a little bit to buy their next home. Or, if you're a first-time home buyer, I've seen many move from single family to saying, you know what, we're not going to compete in this craziness, but then let's be smart about our decisions and buy a multifamily. We'll live in one of the units and rent out the other 2 units, save up more cash, and then in a year or 2, 3 years, we'll buy our single family. So, the days of, okay, I want to buy a $300,000 house, we'll go out for 2 weekends, we'll find you a house, we'll make a couple offers and have it accepted, are gone. And I don't see anything short of a major economy collapse that would cause that to change.
No. So, and again, with the buyers, a couple of the tips that we talked about already, try to stretch your down payment, just because you want to be a strong buyer in a big, long line or a long list of offers that's going to come through. So be as strong as you possibly can. And that's basically having more cash available. And that could be a gift, that could be tap into some of the things that you didn't ever want to tap into, just to show that you can, not necessarily that you're going to do it that way. Right. But that's the 5% downs aren't getting accepted. We know that.
No, for sure. I'd also like to see towns get a little bit creative in their development approvals and what they're willing to do. And, because if we could create some more inventory, whether it's active adult communities, a little easier approval processes, or, you see other parts of the country doing, smaller lots, but leaving open space, for open land, but, approving a half-acre lot development instead of an acre and a half. there's got to get some there's got to be some more creativity that comes down the pike if nothing else is going to change our inventory, or we're just going to become the new California for prices. I mean, it could happen. I mean, we could be a couple years from now talking about a starter home starting at 400,000 and up.
It looks like he's going there, right?
Yeah.
I know.
Sure. Have anything else to share? Otherwise, I think we'll wrap it up and
No, just if anybody wants to reach out, we can,
let everybody know how to get a hold of you for sure.
Yeah, you can email the Bill Murphy team at fairwaymc.com, especially if you need we get agents rush pre-approval on a weekend. I mean, we'll do it. Just for whatever circumstances they have, there's sometimes that's necessary, and I understand that. But yeah, you could always call us in the office, and then I'll have Josh. He'll send out some links for those CEs and the economic trends. You don't want to miss Barry Habib. Barry Habib, he's won the Crystal Ball Award. Is actually such a thing because we always say I don't have a crystal ball, but there's actually an award by Pulsenomics, and basically he's an economist, all things housing, all things mortgages, all things interest rates, and he's won it he's won it 3 out of the last 4 years. And that's a guy I follow, and he's going to be on April 28th, 2 to 4 and you get 2 CEs, and he's a great speaker, and the guy is so in tune to the market. And then we also have David Childers, VP of Marketing for Keeping Current Matters. That was Steve Harney's baby. Everything housing, getting the sellers and buyers off the fence is one thing he always. That was kind of his motto. And so he's going to be our guest on May 25th, 2 to 4 for CEs as well through the board. So you don't want to miss any of those classes because there's so much good content that these experts are going to share. So it'll be good.
Awesome. All right, good. Well, then I appreciate your time, Bill. And it doesn't look like I have any questions here. Q&A. So I think we covered a lot. I think that was a good session. Appreciate your time, and as I said, post the recording so everybody can take a look at it after the fact.
Fantastic. All right, Tracy.
All
Thank
right.
you.
Thanks, Bill. Have a great day.
And take care, everybody.
Chat soon.
We'll see you. Bye.